Arun Kumar, the CFO of Vedanta, now joins us on the show. Mr. Kumar, really appreciate you giving us your time on ET Now. I want to start by talking about your margin performance because that's something of a concern for most on the street. It has missed expectations, and we understand coal shortage was one of the reasons.
See, if you look at Vedanta's margins, whether it is a low price scenario or a high price commodity scenario, we've always been having a consistent margin of 35 to 40% range. So at this quarter, it just happens to be at the lower end of the range, but pretty much excluding the tolling business, when I say it's about 35 to 40%, very healthy margin profile. You know, it's a diversified group. It's probably the only diversified metal and mining international group based in India, not to leave aside oil and gas. So there will be some margin pressures in one or two commodities at one point of time, but that's the whole idea of having a diversified portfolio. I think 35% very healthy margin. Yes, there are some inflationary pressures on the commodities, especially on coal and a bit on alumina. But we believe the government is taking all actions to increase the coal supply, as you also hear from Coal India Limited or the ministry. So we believe it's temporary, and by the end of fourth quarter, I think we should be really back at the higher end of our profile.
You know, you've also raised the guidance for the aluminium cost of production again for the second half of FY18. So does that mean that you expect the coal shortage scenario to continue?
As I said, the supply side constraints could continue for a while because it's starting to get better. We see that end of October, things are better on the ground level. So it does take time to play it through the third quarter, which is why the second half, as a guidance we have been talking about, we believe fourth quarter will be again strong when the supply side issues go away in coal. End of the day, look, it's a 2.3 million ton aluminum capacity that we have, the biggest in this country, probably the single biggest single location facility in the world at Jharsuguda. And 2.3 million, it's got a healthy long-term margin profile of upwards of $500. So it's well above $1 billion business. So that's the challenge where it lies, is really to get there as soon as possible.
Mr. Kumar, morning now. Tell us a little bit about how much your average realizations in each business segment have increased by, and do you think that they will still remain elevated?
See, two things happening for us. If I have to talk the macro picture, copper is doing very well. The copper price is holding up. It's really the supply side issues plus some demand picking up globally. Aluminium is really driven by supply side. A lot of capacity is going out in China, be it because of the clean drive or because of the harsh winter out there. Zinc has been on a 10-year high. The price is at a 10-year high, as you all know. Even Brent has stayed above $60 for the last couple of days. It's a 2-year high. So all this augurs very well for a company like us. But at the end of the day, our philosophy is really to focus on maximizing the volume, minimizing the cost, maximizing the efficiency, and we ride all the price cycles. So if you really look at Q1 versus Q2 on a sequential basis, which is there in everybody's mind, we delivered approximately 1,300 crores of EBITDA higher than quarter one. And it's really half-half. It's coming half from price and half from a volume ramp-up that is underway in aluminium business, as well as zinc slowly inching up to the 1.2 million mark in FY 2020. So it's a combination of operational performance, but yes, tailwinds from commodity price help.
Now, the oil and gas business on the top line front has not done very well, but you have given a strong guidance for production for the full year. So what will the oil and gas business do in terms of revenues?
See, that's a very excellent question, I would say. Oil and gas, we are in a sweet spot. We're very positive about it. As you know, the country doesn't produce the oil that it consumes. It produces 30% of the oil, and we are 25% of that 30%. So the potential is immense. That's the real big picture in oil. Having said that, what have we done in the last year or so? We've consolidated the decline in the natural decline in the fields through very high-tech programs like EOR. So we've arrested the decline and we have mitigated the decline. And parallelly, what have we been doing? We've been working on 6 or 7 projects, which 2 years ago, if you recollect, our oil and gas CEO, all of us said that it makes sense at $70 Brent. But today at 40 Brent, these projects can give us 20% plus IRR. Needless to say, at 60 Brent, it'll be much more. And that's exactly what we've done. We've gone back, re-engineered, made all these projects feasible, and they're all at a very, very advanced stage of giving the contract out and tendering.
Okay. Mr. Kumar, my next question comes on your revenue growth and the sustainability, because as the higher volumes and the LME prices will come into the base, what can one expect from Vedanta going forward? What would be an average sustainable revenue growth rate?
See, the revenue growth for Vedanta is not really contingent on the prices. The prices are what they are at this point of time. They are range bound, they are healthy, and we expect the demand supply equation to probably stay that way for the next year or two. The real growth in revenue or top line for us comes from the ramp up. If you see aluminum, we want to get to 2 million ton per annum rate and step it up to 2.3 million tons. At this point of time, it is about 1.5 million ton rate. So that's going to give a fillip to the revenue. We talked about the growth projects in oil. Imagine 200,000 barrels going to 300,000 barrels in a couple of years. If we can achieve and execute very well, that's going to increase revenue substantially there. So zinc, the production from a current level of 1.1, we believe by FY 2020 should go up at least 40% to 1.5 or 1.55 million tons. So,
right. Mr. Kumar, if I could come in here, because a lot is now being said about the inorganic opportunities that Vedanta is considering, be it buying some stressed assets or even entering gold mining via Deccan Gold. Can you give some confirmations, throw light on all of this?
Yeah, absolutely. See, inorganic has always been a part of the company's growth story, but at the end of the day, we have a laundry list of brownfield organic expansion opportunities for us internally, which is really where the whole focus is. Not to rule out anything inorganic, but every opportunity will be looked at on its merit. It has to fit into the capital structure, it has to fit into the return structure. Nothing is going to be pursued for the fancy of pursuing it. It has to be a very thought through decision, but focus on the hand is brownfield, organic. Anything inorganic and attractive comes its way, we will look at it on a case-to-case basis and let you all know.